The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to this third day of the Prepare to Pass webinar for the paper APM. This is Lukman Rafiq here, your tutor for this paper. We have had 2 good days of this APM webinar, and during the period of last 2 days, the things that we have discussed up till now that actually included multiple aspects. Like on the first day, what we have done is we have actually gone through the areas of the performance. We went through the basic concepts of the performance management. In addition to the basic concepts of the performance management, we actually went through the different types of business models that included the building block model, that included the balance scorecard, that included the concept of this performance pyramid. So we went through all of them. We discussed about the performance measurement hierarchy also. And in addition to this, what we did was we did actually go through the examination question, and that examination question was on performance pyramid. Then what we did was we actually moved a bit forward, and the next thing that we did was we actually for the second day we actually went on to discuss some additional area, and that was the different type of examination questions that we usually come across with respect to performance. Before that, I discussed about the concept of performance management report. I told you people that what exactly is the concept of performance management report. The concept that I explained with respect to the performance management report was that a performance management report is a report that is being that is the report which is being made for the board of directors to make a decision. That is considered to be the performance management report. We discussed about it. We moved a bit forward. We discussed that there are usually 4 different types of examination questions that come across. That includes evaluation of performance, that includes evaluation of performance measure, evaluation of performance management system, evaluation of performance report. All of these things were actually discussed. Then I actually moved forward. I attempted one of the examination questions, and that examination question also included an area which was actually termed as the benchmarking. So I went through the benchmarking also. I explained to people what benchmarking means. I explained to people what are the different types of benchmarking. And then what I did was I actually talked about the different steps for the benchmarking. We attempted the question. We actually concluded the entire benchmarking pertaining to this specific question. That is something that we did. Now what we are going to do now is that we are now going to move a bit forward, and we are going to discuss further. But before I move on, let's have a quick recall. For those of you who don't know me, here is a quick introduction of myself. Been in teaching profession for more than 13 years. I've been teaching different subjects. So that is what it has been. Now, what actually happens is that this is something that is actually there. Now, what we would be doing now, I mean, like before I move on to day 3, in case if there is anyone having any questions, please do let me know, and I'll be happy to answer your questions, or else I can move forward. Yeah, in case if anyone is having any questions, do let me know, and I'll be happy to answer them. Yeah, anyone having any questions, please? Okay, I'm still not clear on the difference between performance management system and performance report. It is claimed that their evaluation is the same, but from the chart they were separated. Yes, they are separated. It's not the same. Yesterday's question was not about performance management system. Yesterday's question was actually about the performance reporting system. So when you talk about the performance reporting system, the concept of performance report is that, I repeat, when we talk about the concept of performance report, the concept of performance report is that you talk about the performance reporting. Actually, that's what you talk about. Yeah, Irina, that has been shared in the WhatsApp group already. That has been shared in the WhatsApp group already. Okay, anyone else having any other question? Anyone else having any other question? Yeah, that has been shared already. You can message me in case if you are not being able to enter into it. Yeah, I repeat, you can message me in case if you are not able to enter into it. Okay, now let's just start off. So I'm now going to start off because I think there is nobody having any other questions now. So I think I should move forward and I should discuss things now. So the topic that I'm going to start off, that is actually termed as the quality management. You have got this topic of quality management here in front of you. I'm going to go through a quick review of this quality management so that every one of you is able to understand. And then once we are done with a quick review of the quality management, then I'm going to start discussing about the examination question on the quality management. So let's talk, let's just start, let's discuss. Okay, so the handout of the quality management is available in the handout section. It has also been shared to you people in the relevant WhatsApp groups. So you can also go through in the relevant WhatsApp group. That is also something that would have to be done. Now let's just start discussing about it. Okay, when we talk about the concept of quality, so let's try to understand that there is no single definition of quality. I repeat, let's try to understand this thing that there is no single definition of quality. What exactly do you mean by quality? So there are different aspects, different ways of understanding the quality. For some people, the quality is defined as if something is fit for use, that is going to be considered as a quality good, or that is going to be considered as a quality product or a quality service. The second thing is that if you are meeting the needs and the expectations of the customers, that means you are providing the quality service. The third thing is that if your product is doing what it is intended to do, that is, it is fulfilling its objective, it is fulfilling what you have committed with respect to a product, that is going to be considered as a quality good. Then if you are satisfying the customer, you are exceeding the customer expectations, etc., etc., that is all gonna be considered as your quality. So I repeat, when we talk about the concept of quality, the concept of quality is actually that whenever we talk about this quality, it actually could be defined as anything. Like, there is no single definition. It could be fitness for use, it could be meeting the needs and the expectations of customers, it could be exceeding them, it could be anything. And now, the second thing is that for everyone, a quality is perceived. The quality is considered to be something else. Like, for some people, there is a good design. If the product is good, if a product's design is good, if the product is stylish, that is going to be considered as quality. For some people, it's going to be considered as the durability, that is going to be considered as quality. For some people, it's a value for money, that the price that they are paying and the benefit that they are getting, that is going to be considered as quality. So there are actually a lot of things. There are actually a lot of things that you need to consider when it comes to the quality. I repeat, there are a lot of things that you actually have to consider when it comes to the quality. Now, let's move a bit forward and let's discuss further. So basically, from the perspective of any organization, an organization has to do a lot of things when it comes to the quality, and you need to understand this thing, that the quality plays a significant role when it comes to the performance management. Because what actually happens is that if you want to succeed as a business, if you want to succeed as a business, the quality goods and the quality services are a critical item, are a critical aspect of the business. That if you want to succeed as a business, you want your customers to be happy, you want your customers to be satisfied. So what you actually need to do is that you need to deliver the quality goods, you need to deliver the quality services. And when you deliver the quality goods and when you deliver the quality services, resultingly what happens is that this leads to the satisfaction, this leads to the customer satisfaction. And if the customer satisfaction is there, that is the reason that is going to drive the sale, that is going to enhance your business's revenue, that is going to enhance your business's market share, and ultimately your business is going to be able to succeed. So when it comes to quality, so the quality is an important aspect from the perspective of performance management, because if your business is not offering quality goods, if your business is not providing quality goods, that means ultimately you are going to be ending up losing out to customers. Now, when it comes to quality management, there is a very important concept which is called the concept of quality cost. Let me give you a brief background to this concept of quality cost. Generally speaking, there are a lot of initiatives that a business undertakes in order to manage its quality. What are those initiatives? Those initiatives include, for example, if there is this supervision, those initiatives include, for example, there is this monitoring of the production of the goods. For example, there is this testing. For example, the customer care, the customer support, etc., etc. There are a lot of things which ultimately are connected to the quality. Why would you set up a customer support desk? Just because you don't want your customers to lose out, just because you don't want your customers to be actually running into a problem in case if you're not if they're not able to use the product properly, or if they are not able to avail the service properly. So all of these things are actually the cost, directly or indirectly, to manage or to improve the quality of the business, its products, its offerings. Now, what actually happens is that if I move a bit forward and if I discuss a bit further, so generally speaking, what happens is that as a business, I repeat, generally speaking, what happens is that as a business, these costs tend to be embedded into different things. Like, they're usually considered to be overheads. Some of them are going to be considered as a production overhead. Some of them are going to be considered as admin overhead. some of them are considered to be selling overhead, etc., etc. So they would actually be classified into the different heads. I repeat, what happens is that they would actually be classified into the different heads. Now, if they are gonna be ultimately classified into the different heads, so ultimately what happens is that um, um, you would not know. I repeat, you would not know that what are the. I repeat, you would not know that what are the quality costs that have been incurred. What are the costs that have been incurred to protect or to improve the quality? I repeat, you would not know that what are the costs that have been incurred in order to improve the quality. So basically, in order to make sure that a business does know that what are the quality costs that it incurs, the the concept of identification of the quality cost was introduced. I repeat, the concept of identification of the quality cost was introduced. When we talk about the concept of the identification of quality cost, so you try to understand. Basically, what happens is that if you have a business where you are able to identify the quality cost, I repeat, if you have a business, you are able to identify the quality cost, so you would actually know that what is the area, what is the aspect of the business where we are actually incurring these costs. Now, let's move a bit forward and let's discuss a bit further. So basically the quality costs are considered or they are categorized into the four headings. What are those four headings into which the quality costs are categorized into? So the four headings into which the quality costs are categorized into, they include the quality um, prevention costs, they include the appraisal costs, they include internal failure costs, they include the external failure costs. That is all that is included in the quality. So I repeat, it is all actually included in the quality. Now let's move a bit forward and let's discuss further. Now what actually happens is that if I say that these are all going to be considered as quality, there's something that I want you to understand. That basically these costs are considered to be what? When it comes to the prevention costs, we say that these are those costs which are incurred before the commencement of production to ensure that no errors arise. So all those costs that are incurred before the commencement of the production, just to make sure that no errors arise, that is going to be considered as the quality prevention costs. I repeat, all those costs which are actually incurred. I repeat, all those costs which are actually incurred in order to make sure, that the quality related issues does not arise. That is going to be considered as what? That is going to be considered as prevention costs. What are the examples of those quality prevention costs? Let's try to understand them. When we talk about the examples of the quality prevention costs, these are the various examples: the costs that you incur with respect to the product design, the cost that you incur with respect to the raw material quality management, ensuring that no poor quality raw material is ensuring that no poor quality raw material is basically purchased. It's monitoring of the quality of the product that are being purchased. That is all going to be considered as what? Quality prevention cost. Then there is this training cost. I repeat, so then there is this training cost, which is the cost incurred before ensuring, I mean, like the costs which are being incurred before the commencement of the production and training your staff, just to make sure that your staff is trained, just to make sure that your staff does not mess up in the end. So that is all going to be considered as what? I repeat, that is all going to be considered as your quality prevention cost and then maintenance, etc. Now, the next thing that you need to understand is that there is this quality appraisal cost. When I talk about the concept of quality appraisal, what exactly do you mean by quality appraisal? The quality appraisal costs are those costs that are incurred during the production phase. The quality appraisal costs are those costs which are incurred during the production phase just to make sure that no issues arise with respect to quality. I repeat, just to make sure that no issues arise with respect to quality, that is going to be considered as what? That is going to be considered as your quality appraisal cost. Now, what are the different types of quality appraisal costs? Try to understand. The quality appraisal cost would include is all supervision, testing, quality controls, equipment testing. So all of these costs are being incurred during the production phase just to make sure that no quality related issues arises. Just to make sure that no issue with respect to the quality actually arise. That is why you actually do it. I repeat, that is why you actually incur these costs. Now, the third one of them is considered to be, I repeat, the third one of them is considered to be the internal failure cost. That is basically the failure is detected before goods are delivered to customer. So in case if there is any failure which is detected before the goods are delivered to the customer, that is going to be considered as your internal failure cost. Now let's try to have an understanding of this. Now what exactly do you mean by this? This would actually mean that basically, for example, if you have manufactured a product and if there is an issue identified within the product, if there is a failure, if there is a problem which is identified with the product, so that is going to be considered as what? That is going to be considered as the internal failure cost. So it's mentioned over here that the cost of rejection, the cost of scrapping out the product, the rework, etc., 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 all of this is going to be ultimately considered as what? It is going to be considered as internal failure cost. Okay, let's move a bit forward and discuss further. There's this lastly external failure. And what exactly do you mean by the external failure? The external failure would actually mean that the failure is detected or the failure is identified by the customer. I repeat, it would actually mean that the failure is identified by the customer. So all those costs which are actually incurred in order to make sure that, I mean, like all those costs which are incurred once the failure has been detected or identified by the customer, they're all going to be considered as your external failure costs. So that would include whether you are handling the customer complaints, that would include whether you're repairing the goods, would include the legal costs, the pickup costs, and etc. etc. All of that is going to be considered as, I repeat, all of this is going to be considered as the external failure cost. Now, let's move a bit forward. Let's discuss a bit further. Okay, so once you have actually introduced the concept of quality cost, so after the introduction of this concept of quality cost, what actually happens is that the cost, the costs are actually identified, the costs are identified as a quality cost. And once they are identified as quality costs, so we are able to know, we are able to understand that what are the areas in which we are incurring the cost. Now, there's something that I want you people to understand, which is that when we talk about the quality cost, when we talk about the quality cost, as we said, that there is this quality prevention cost, there is this quality appraisal cost, there is this quality internal failure cost, there is this quality external failure cost. Now, when you talk about the quality prevention, quality appraisal, internal failure, external failure cost, so you need to understand this thing that this prevention and the appraisal cost is actually termed as the cost of conformance. So if you are complying, if you are conforming to the quality standards, these are the costs that you would incur, and these are the cost of non-conformance. So wherever you are actually non-conforming to the quality standards, you would be incurring these costs. I repeat, whenever you would be non-conforming, non-complying with the quality standards, so you would be incurring these costs. Now, if I tell you a bit further, so I would actually say that the traditional theorists, the traditional theorists who used to talk about the quality management, the traditional theorists had a viewpoint that an organization should actually incur the quality conformance cost, so it would actually avoid the non-conformance cost. When you would be incurring the quality conformance cost, you'll be able to avoid the non-conformance cost. Now, what exactly do I mean by this? That if you are going to be incurring the conforming cost, you will be able to avoid the non-conforming cost. That means the prevention and the appraisal cost would actually end up saving the internal failure and the external failure cost for yourself. Now, what you need to understand with respect to the entity is that there was a viewpoint that the traditional quality management theorist had. So what was actually the viewpoint of the traditional quality management theorist? It was actually, they were like, you need to compare the cost incurred for the prevention and the appraisal with the cost saved for the internal failure and the external failure. So I repeat, what was their viewpoint? Their viewpoint was that you got to compare the cost that you've incurred with respect to the prevention and the appraisal phase with the costs that are being saved with respect to internal and external failure. So for example, if you have incurred a cost of, let's say, $100,000 here, and the cost that you have saved in here are, let's say, $80,000. So ultimately what is actually going to happen is that ultimately the traditional quality management theorists were like that, why do we need to incur this cost? Don't incur this cost. Let this failure happen. So the concept of this traditional quality management theorists was that the traditional quality management theorists were like this, that if the cost incurred for quality conformance exceeds the savings due to non-conformance, the saving due to non-conformance, then, so I repeat, if the cost incurred for the quality conformance exceeds the savings due to non-conformance, then the entity should, then the entity should not incur the conformance cost and let the non-conformance cost arise, that is, let the internal and external failure happen. So what happens is that if we talk about this, we would say that if the cost incurred for quality conformance exceeds the saving due to non-conformance, that's what the viewpoint was with respect to the traditional quality management theorist. Now, let's try to understand further. So basically, when the modern day quality management theorist, what they did was they challenged the theory and they challenged the concept of these traditional quality management theorists. Now, what was the challenge that they did was they were like that, okay, I repeat, what actually happens is that when you have got these modern, I repeat, what happens is that when you've got these modern day quality management theorists, what they did was they actually challenged this concept of the traditional quality management theorists. Why? Because their viewpoint was that, look, I repeat, their viewpoint was that, look, if you have got if you have got external failure, that is, if your customers are not happy. I repeat, if you have got external failure, that means your customers are not happy, right? So if your customers are not happy, you would actually tend to lose so many potential customers. Why would you tend to lose so many potential customers? Because generally speaking, what happens is that if you are good, then this specific news may take time to spread. This may take time to spread. But if you are not good as an organization, I repeat, if you are not good as an organization, so if you are not good as an organization, then ultimately what happens is that uh, this news is going to spread very fast, and every single person who is not even your customer would actually come to know that you are not a good organization. So let me try to help you this. Okay, for example, I am conducting this webinar. um there are going to be multiple things that are going to happen. For example, if I am teaching very well, then you might tell one of your friend, you might friend two of your friend, three of your friend, you might hear my name, you might say, okay, I studied from him, he was good, he was excellent, he was okay. There could be different things. But God forbid, if my delivery is not up to the mark, if I'm not being able to deliver on any specific day up to the mark, or let's say maybe possible if I conduct a webinar in which I am not performing up to the mark, so what is going to happen? The next time you would hear my name, you would say, no, 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 don't go. And even the people who would be planning to go, you would tell them that don't go to this guy, right? This is because it's a natural human habit, that what happens is that the human nature is like this. As a human being, what you would do is that you would spread positivity slowly, but the negativity is spread very fast. The negativity is spread very fast. So basically, if the external failure has happened, so you don't have an idea to what extent the damage has been done. You don't have an idea to what extent the damage has been done. So now, if you don't have an idea to what extent the damage has been done, so what is actually going to happen? Let's try to understand. What is actually going to happen is that if you don't have an idea that to what extent the damage has been done, so resultingly the modern day quality management theorists were of the viewpoint that, look, there is no room for failure. There is no room for failure. If you say that we are allowing the failure to take place, let the failure happen, no, 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 there is no room for failure. You don't have an idea, what is going to be the impact of this failure. I repeat, you don't have an idea that what is going to be the impact of this failure. The failure's impact is going to be hidden. It won't be easily tracked. It won't be easily traced. Is that okay now? So is everyone okay now? So up till now we have discussed the basic concept of quality. We've also discussed the concept of what the quality management is, what are the quality costs, and we've also discussed that what was the traditional viewpoint and what is the modern day management's viewpoint. In case if anyone is having any question, then let me know. Rebecca, that's what I told you, that um, the long-term benefits are there for the conformance cost, because if you let the failure happen, that's a disaster for you as a business. Yeah, is everyone okay with this? Please don't sleep. Please don't sleep. Please be awake. Okay, Anuja. I'll repeat the modern day theory. The modern day theorists were of the viewpoint that you cannot let the failure happen. Why? Because if you're going to let the failure happen, you don't have an idea about the impact of that failure. Why? You don't have an idea about the impact of that failure. You don't have an idea that what is going to be the external failure going to cost you. Because the customers who are not happy would tell many people that they are not happy, would actually stop many people from coming to your business to buy, to purchase, to deal with you. So that is going to be an issue that would arise with the business. Now, so that is what the modern day quality management theorist is. Now, with respect to the quality management, there are basically different types of concept, and amongst those different type of concept, there is a very famous concept which is called total quality management, which is also termed as a TQM. A lot of people think that TQM is actually a name of a technique. So let me tell you that TQM is not a name of a technique. It's actually name of a culture. The total quality management is actually a name of the culture. The background to this culture is basically the culture prevalent at the Japanese organizations, the Japanese auto car manufacturers, who used to have a certain culture uh, with respect to how their organizations actually operated. Like they had some cultures, so whatever the features of those cultures were considered to be the factors behind the good quality of the Japanese auto car manufacturer. Now, so when we talk about the concept of, I repeat, when we talk about the concept of this, basically, let's try to have an understanding. When we actually talk about this specific concept, what concept? That this total quality management, so total quality management is not the name. I repeat, total quality management is not the name of a technique, but rather it's a name of a culture. What is that culture? It's the name of the culture that was prevalent in the organizations. I repeat, it is the name of the culture that was prevalent in the organizations, the Japanese organizations, which actually operated, which actually competed with the world's best car manufacturing organization. And what were the key features of that culture? So the key features of those culture included what? I repeat, the key feature of that culture included all of these things. That these organizations were customer focused. That is, they focused upon what the customer, I mean, they focused upon what the customer wanted. They focused upon what the customer wanted. They focused upon the customer needs, the customer's expectation. That is what these organizations actually focus upon. The second thing is that the leadership and the business results. When we talk about the concept of the leadership and the business results, what exactly do you mean by this? When we talk about the concept of the leadership and the business results, it's actually like the organization's top management is focused upon producing results, focus upon guiding the individuals. That is what it actually happened. Then there was this continual improvement, the fact based decision making. That is, the information is going to be collected, then a decision has to be taken. Then there is going to be the continual improvement and the relationship with the suppliers and the partners. All of these things actually prevailed. I repeat, all of these things actually prevailed with respect to those organizations. I repeat, with respect to those organizations who actually adopted this total quality, who actually had these total quality management. So when we talk about the TQM culture, always remember that there are going to be some features that would exist in a TQM culture, which is that there is going to be the employee involvement. The first thing is there is going to be the employee involvement. The second thing is that you would have a good relationship with the customer. There is going to be a good relationship with the supplier. Then additionally, what actually happens is that um, you would go for the right first time approach. You would go for the continuous improvement. These are all going to be the characteristics of a total quality management culture. So when it comes to the modern day organizations, the majority of the organizations, what they do is that they try to achieve this TQM. I repeat, what they do is that they try to achieve the TQM, which is the total quality management culture. Now, let's move a bit forward and discuss further. So this TQM actually has got different type of techniques, and those different techniques were actually applicable on those organizations where the TQM culture was assumed to operate, and that includes the target costing, that includes the target costing, that includes the Kaizen costing, that includes Six Sigma. So there were these different type of techniques that actually existed at these organizations. What I'm going to do now is that I'm going to talk about the different type of techniques with respect to this TQM culture. Okay, let's just start discussing about the next aspects. So the first one of them is actually termed as Kaizen costing. First one of them is Kaizen costing. Now, what exactly do you mean by the concept of Kaizen? I repeat, what exactly do you mean by the concept of Kaizen? Let's try to understand. The technique, the concept of Kaizen is that the Kaizen actually means a small improvement. I repeat, the Kaizen actually means a small improvement. I repeat, the Kaizen actually means a small improvement. Now, what exactly do you mean by this Kaizen to be a small improvement? Let's try to have an understanding. Basically, what happens is that when we talk about the concept of this Kaizen to be a small improvement, for example, you tell your employees that, look, I repeat, you tell your employees that, look, we are presently producing this product, uh, and our manufacturing cost is, let's say, $25 per unit. For example, you tell your employee that, look, our manufacturing cost is $25 per unit. So if our manufacturing cost is $25 per unit, what I want you people to do is that I want you people to take, let's say, a month's time and try to make sure that we are able to reduce it to $24. I repeat, let's make sure that we are able to reduce it to $24. Now, for example, if you are able to reduce it to $24, try to understand this thing. Basically, what happens is that the employees, what they would do is that they would think that, okay, it was already 20, it was already $25 and we have to reduce it to $24. So if we have to reduce it to $24, so what is actually going to happen is that it is something which is doable within 1 month. What we would do is that we would apply our expertise, our knowledge, our experience, and we would try to reduce this to $24. Okay, now, so basically the employees, they would get motivated. Why would they get motivated? They would get motivated because they would think that this is something doable. I repeat, they would think that this is something doable. They would actually be trying to apply their minds, they would try to apply their brains, and they would try to reduce this cost somehow or the other. Now, when they would apply their mindset, so they would be able to reduce the cost some way or the other, to whatever possible extent that they can, they would be able to reduce it. Now, when the employees, they would be able to reduce it, it is actually going to give them a lot of confidence. I repeat, it is actually going to give them a lot of confidence. Why? Because if you think that there is an employee who has actually been able to do this reduction in his through his own efforts, so if the employee is able to do the reduction through his own efforts, this is going to give him loads of confidence and he would be very happy, and he would be like that, okay, yes, we are contributing towards the organization's improvement. Now, once this $24 target is set, you might actually tell them that look, 23.2, then you might set 23.22.5, then 22, so on and so forth. So these are the things that might actually happen. I repeat, these are the things that might actually happen when you actually apply this Kaizen costing. Now, when we talk about this Kaizen costing, so that is something that you would have to consider. Now, let's try to move a bit forward and let's try to discuss further. What actually happens next is that what actually happens is that how is this possible? This is actually this is actually possible with respect to these 5 elements. What are these 5 elements? That's a teamwork. They should work as a team. They should work as a team. When they should work as a team, so this would actually mean what? That automatically there is going to be a knowledge sharing, there is going to be a discussion, there is going to be discussion amongst themselves, there's going to be knowledge sharing, which is ultimately going to help them. The second thing is that the personnel discipline, the people, they would want that we are the ones who have to contribute, we are the ones who have to actually bring about the improvement to the organization. Then there is this improve morale, etc., etc. So basically ultimately it's again the teamwork, employee involvement, trying to improve, innovation, creativity, all of these things are ultimately going to have an impact of helping you as an organization reduce the cost. So what is it? This is actually going to help you reduce the cost. Now let's move a bit forward and let's discuss further. Okay. And similarly, there is another technique, and that technique is termed as the concept of target costing. Let me go through the target costing and then I'm now going to move on to the examination question. So when we talk about the next technique, which is actually termed as target costing, let's try and let's have an understanding of this. So when I talk about this concept of target costing, The target costing is basically one of those techniques which actually starts off like this. Okay, let me check one or two of the questions. Well, quality circle is basically when you have got some group of people who meet regularly and they discuss about the quality issue. I repeat, you've got a group of people who meet regularly and they discuss about the quality issues that is considered to be quality circles, which has got people from the different departments, which have got people from different departments of the organization. That's what the quality circle actually means. Now, let's move a bit forward and let's discuss further. The target costing. I hope that the quality circle is clear to you, Aaron. Now, when we talk about the concept of target costing, how does target costing operate? So whatever product that you wish to sell, you try to establish the selling price of that product. For example, if you establish the selling price of the product to be $100, what you do is that you deduct from it your desired margin. I repeat, you deduct from it your desired margin, which is, let's say, $20. So when we talk about the concept of target costing, what actually happens with respect to target costing is that assume that you've got a selling price of a product which is $100. The second thing is that um, the uh, the desired margin is $20. Now that means this product needs to be manufactured in $80. And if your actual cost is, let's say, $95, so what is going to happen is there is going to be a $15 cost gap. I repeat, there is actually going to be a $15 cost gap. Now, let me try and help you understand. I repeat, let me try and help you understand that if $15 is going to be considered as a cost gap, how exactly are we going to deal with it? I repeat, how exactly are we going to deal with it? Let's try to have an understanding about it. Now, when we talk about this $15 as the cost gap, so what you would do is that you would try to reduce this gap. And there are different approaches through which you would try to reduce the cost gap. You would say, okay, what is the reason? What is the reason for this cost? I repeat, what is the reason for this cost? Now, when you talk about that, what exactly is the reason for this cost? So maybe the labor cost is too high, maybe the material cost is too high, maybe there are basically some other overheads, etc., etc. There could be different type of costs that could be the reason for this whole. I repeat, there could be different types of costs that could be the reason for the uh, I repeat, there could be different types of reason that could have led to higher cost. Now, what actually happens is that what we do is that we try to reduce this gap. Maybe if there is a labor, you might actually train them, you might actually outsource them, you might actually revise their arrangements, etc., etc. For there is a material, you might improve the efficiency. You might actually say that we need to improve the efficiency of the material, the way the material is actually being used, or maybe you could find the alternate material, or maybe you could try to eliminate the wastage of the material. There could be a lot of things. I repeat, there could be a lot of things. So I repeat, there could actually be a lot of things. So now, when there could actually be a lot of things, so how exactly are we going to handle this thing? So what we would do is that we would try to ensure that the alternate treatments, that the alternate things are actually done, just to make sure. I repeat, what we would do is that we would try to make sure that we are able to. I repeat, we would try to make sure that we are actually able to reduce this cost, just because this cost gap needs to be reduced. There may be overheads. So maybe possible at times what happens is that you work on a product design. At times you work on the product design, or you amend the process of manufacturing a product. All of the things, you should make sure that the quality of the product is not compromised. I repeat, all that you have to do is that you have to make sure that the quality of the product is not compromised. Is that okay? So you got to make sure that the quality of the product is not compromised. Now, let's move a bit forward. Let's discuss further. Is everyone okay till now? Anyone having any questions? Please let me know. What is the meaning of compromising? The meaning of compromising is that you are not reducing the quality of the product. I repeat, when it comes to the compromising, that means you are not reducing the quality of the product. That is what it is. The features which the customer want, you're not reducing them. Okay. Yes, GIT for material, that could be the one. Now, so we have discussed about the basics of these. Now what I am going to do is that I'm now going to be talking about, I repeat, I'll now be talking about the concept of, I repeat, I'll now be talking about the concept of this, I'll be talking about the examination questions now. So that is what we will be discussing now. No, that's not relevant, Olu Cooker. If you are given a markup, you will have to work backwards. I repeat, if you are being given markup, you will have to work backwards. Okay, so you've got the, I bet you've got the handout. I mean, in fact, yeah, Six Sigma is also a technique of TQM. There are more techniques. I'll discuss them, but not right now because I need to move on to the examination question right now. So this is basically question number 1 of the March June 2019. I repeat, it's a question number 1 of March June 2019. Okay, so March June 2019, question number 1. The name of this question is fault. The name of this question is fault manufacturing. So the name of the question is fault manufacturing. Let's come on to this question. I've also shared this handout to people on the relevant WhatsApp group. I repeat, I've also shared the handout to people on the relevant WhatsApp group. So you got to join that also. You got to actually access that question from the WhatsApp group also. Now try to have an understanding. What does it say? It says the company information, the background, overall objective, and the critical success factors for the company. Fault manufacturing, performance measurement system. Performance measurement system. A lot of you people were like system. So here is it. The system is for you people now. Now, what next is there? It says details of work required to create an appropriate performance measurement system at fault. Then there is this outsourced manufacturing, the initial plans about an outsourced contract with Zayla Manufacturing. Then there is this target costing, which is the work requested on how target costing would impact the contract negotiation with Zila. Responsibility for quality costs, responsibility for quality areas, request for advice on how the responsibility for these areas will be allocated in the outsourcing contract. Then there are these sources of information. Then the appendix 1, and it says this information should be used to answer the question requirement within your chosen options. Now, what is it that we need to do? I repeat, what is it that we need to do? So we now need to move a bit forward. We now need to discuss further about it. Okay, so this is something that is there. I'm going to read the questions requirement first, because so that I could have an idea in advance that what exactly is he asking me to do. So one of them is write a report to the chief executive of the fault manufacturing to respond to his instructions for work on the following areas: the recommendation and evaluation of KPIs for the performance measurement system, the recommendation and the evaluation of KPIs for the performance measurement system. So what you would have to do is you would have to talk about that. Are the KPIs appropriate? Are these KPIs appropriate? Or there could be additional KPIs that could be introduced within this organization. Next is target costing. Okay, so we'll talk about it. The third is quality cost and responsibility for these in the outsourced contract. Fourth is the impact of sources of information on the management of quality in the outsourcing contract. So all of this is there, which we are going to discuss now. Anyone I hope that you all are with me, right? Now see, um, let's talk about the first area. I repeat, let's talk about the first area. What is that first area? Which is about the company information. When I talk about the company information, um, it says Fault Manufacturing is a company which is majority owned by its management team. A number of years ago, it was bought out of a larger multinational business by the management team. The management team were supported by a venture capital firm who provided the remaining equity and now supply all the debt required by the business at market rates. So what happens is that the venture capital company supply all the debt that is required, whatever the amount of loan that you need, they're gonna supply it to you, but at the market rate, rates. Now it says the business manufactures the business manufactures and sells. Okay, so now the business manufactures and sells digital imaging devices for use in a variety of industrial situations. A key component in its product is the image processing software which is included. So what is the key component in its product? It's an image processing software. It says Fault has a small team of software developers who are beginning to gain a reputation for innovative solutions. So they are gaining a reputation for innovative solutions. Now, Fault has faced increasing pressure in its home market of Beeland from manufacturers in countries with lower cost bases. What has happened with Fault? It has faced increasing pressure in its home market of Beeland from manufacturers in countries with low cost bases. As a result, it has decided to invest in developing its image processing software rather than compete on the manufacturing of the hardware. So they are actually um, they're talking about the image manufacturing because they've got a good development team. As a result, it has decided to invest in its image processing software rather than compete on the manufacturing of hardware, which is the imaging device. It will continue to sell the imaging device, but the manufacturing will be outsourced. Now, Fault's overall objective is unchanged, and it is to provide an adequate return to its capital providers while growing the business into world-class supplier in its areas of expertise. So what happens is that the overall objective is unchanged. And what is that? It is to provide an adequate return. The overall objective is to provide adequate return to its capital providers while growing the business into a world-class supplier in its areas of expertise. I'm copying it down and I'm saying that I will put it here. The reason being that I need to see that what is going to happen. Now see, the chief executive has identified three factors which are critical success factors to achieving this objective. These are keep capital providers satisfied. So these are the critical success factors that are being identified with respect to Fault. And what are the critical success factors that have been identified? That includes what? That includes keep capital providers satisfied, build world-class software development team, and ensure that the quality of the imaging meets market standards. Okay, so we have actually discussed the basics about the company information. Now the next one of them is performance measurement system. What is it? It actually tells you the way the performance is measured right now. The way performance is measured right now. It says the CEO requires assistance from you as a performance management expert to create an appropriate performance measurement system for fault. Now, what is a performance measurement system? It's a method, it's a way of measuring the performance. First, he needs you to recommend. Now, what does he want? He needs you to recommend suitably justified KPIs for each CSF. Again, if we have got each CSF, he wants us to recommend the KPI for each one of them. CEO has indicated there should be a maximum of 2 KPIs per CSF in order to avoid overload. Then he wants you to assess the use of this group of KPIs to measure the strategic performance of fault. Okay, now the questions requirement is recommendation and evaluation of the KPIs for the performance measurement system. Now this is actually the questions requirement as per the examiner. But what I have done is I have copied a lot of things for my own purposes, just because I want to actually know what is going to be happening. I want to know that how exactly would I be able to answer the question. So for this I have done that. Now what I'm doing right now is I'm just going through these just to have a good idea that if there is anything which is relevant. This is for Zela manufacturing. This is for target costing. This is for quality. Okay, this is for sources of information. And then there is this appendix. So apparently nothing is relevant, no information is relevant with respect to this part A or the questions requirement number 1. Now what we are going to do is that we are now going to answer the questions requirement. Now what is the examiner asking us to do? The question is very different. And this type of question has never been answered in never been tested earlier. Okay, Rebecca, that is what I have done. That is what I have done also. Now try to understand. The first one of them is, it says keep capital providers satisfied. Keep capital providers satisfied. That's the first critical success factor. Now my question to you people is that who are the capital providers? Who are the capital providers? I'm just hoping that I have not lost anything there, because I don't know what happened. What button did I press? I don't know. Okay, unfortunately, I don't know. I mean, like, I just pressed the back button somewhere or the other and got pressed, and I've lost the key information which I gathered. Anyways, now let's just go back to it. Okay, so the first one of them is, I repeat, the first one of them is, the first critical success factor is that you have to keep the capital providers satisfied. Now let's try to have an understanding what exactly do you mean by keeping these capital providers satisfied. Try to understand this. So my first question to you people was that who are the capital providers? When you talk about this, you see that Fold is a company which is majority owned by its management team. Who is majority owned by its management team? So one of them is actually the management team. One of them is actually the management team. That's what the capital provider. Who is the next one? Management team were supported by a venture capital firm who provided the remaining equity. So there is a venture capital firm also. There's a venture capital firm also. And what actually happens is that who provided the remaining equity and now supply all the debt required by this. So this management accounting firm provided equity plus they supplied debt, and the management team, they only supplied equity to the business. What am I doing? I'm just listing down the key information so that I'm ready for the answer. The business manufactures and sells so and so, so and so. A key component in its product is so and so, so and so. Fold has a small team of manufacturing. Fold has faced increasing pressure in its home market, so and so, so and so. Fold's overall objective is unchanged, to provide an adequate return. Now, what do they want to do? To provide an adequate return to its capital providers while growing the business into the world-class business. So basically, they want to keep the capital providers satisfied. And how? By providing an adequate return to its capital providers. Now try to understand this, try to have a good understanding of this. Now see, so basically what would happen is, I'm just gonna write down few of the points. The fault intends to keep its capital providers happy. Management and venture capital organization have provided equity. The debt has been provided by the venture capital organization. So if we look at the adequate return that are generated for the providers of capital, then an overall return is required to be calculated. This can highly likely to be the return on capital employed, the ROCE, because it will cover the return to all providers of finance. Because it will cover the return to all providers of finance, like the debt providers, the equity providers, that is all. Okay, there is a student who is asking that can we save the answers? Yes, it's auto saved, but I think something wrong happened with me, that's why it could not be auto saved, but generally it's auto saved. Now let's try to move a bit forward and let's try to discuss further. So you would say that they can be highly likely to be return on capital employed. Now, again, we just need to see what is the examiner asking us to do. I can go back again to what he wants. He wants us to recommend suitably justified KPI for each CSF. And then there should be a maximum of 2 KPIs for CSF in order to avoid information. Then he wants to assess the use of this group of KPIs, the group of KPIs to measure the strategic performance at fault. So if I try to say that this is another part of the question's requirement, which is he needs us to recommend suitably justified KPI. So that is to the equity and debt provider. The additional calculations for return on equity and the return for debt providers could also be calculated, but the overall KPI of ROC would cover both types of finance providers. So that would actually cover both types of finance provider. That is something that's going to happen. So we have got the first one. The first requirement of the question was that you were supposed to, I repeat, the first question's requirement was that you were supposed to actually talk about that keeping these capital providers satisfied. Now what next is there? The next is that build a world-class software development team. Build a world-class software development team. Now a very important point. When we talk about the development of a world-class software team, we just need to think that what exactly are the different types of software that the entity is planning to introduce. Okay, now see, what happens is that this is a difficult to measure as it is a subjective measure, cannot be directly estimated. Again, I'm telling you that you have to write down the answer in terms of short paragraphs. Why do I write down the answer like this? Just because I want you people to have a good idea about the various pointers that I have made to the question. I want you people to have an idea about the various pointers that I have made to the question. So it is difficult to measure, subjective measure cannot be directly estimated. Generally, the market recognition is a key factor for being world class. Market recognition is reflected. Market recognition is reflected through the market recognition is reflected through what? It is generally reflected through growth in revenue, um, the awards, number of projects won. These are the few things that could actually give you market recognition. So the appropriate KPIs, or you could say for these CSF, could be revenue growth, or I could say number of awards for best software team one. The second thing is that the number of projects completed or the number of projects obtained, that is also going to be an indicator of the market recognition of your skills and capabilities. Now let's move a bit forward and let's discuss further. The third one of them is ensuring that ensure that quality of the imaging devices meet the standards. Now, what exactly would we mean by this? Okay, I could have put in more performance measures here, but I'm not introducing more performance measure. The reason being that the examiner has specifically mentioned that you have to actually mention two. You have to mention two. So let's try to see what is there in the business. To provide an adequate return to its capital providers while growing the business into a world-class supplier in its area of expertise. Ensure that quality of the imaging devices meets the market. So the quality of imaging devices would be judged by the customers. The customer reactions, the customer's suggestions, the customer's referrals would be a suggestive measure, for the quality of the devices. This could be measured using this could be measured using what? This could actually be measured using, I repeat, this could actually be measured using, you could say that the warranty claims, customer referrals, market share, growth in revenue, all of that could be there. So the most appropriate measures could be the revenue growth and the warranty claims. That could be considered the most appropriate performance measures. So if I could go back to the requirement of the question, this is what the objective of FOLD was. Chief Executive has identified these three factors. We have done that. He needs you to recommend suitably justified KPI for each CSF. The CEOs indicate that there should be a maximum of 2 KPIs. We have done that. Then he wants you to assess the use of this group of KPIs to measure the strategic performance of FOLD. So the group of KPIs suggested for each of the critical success factors are as under. So that is number one, the return on capital employed, which is ROCE. You've got the return on capital employed, which is ROCE. So the next one of them is basically revenue growth and warranty claims. Okay, let me go back to it a bit. Fold has faced increasing pressure in its home market of Beeland from manufacturers in countries with lower cost basis. Okay. As a result, it has decided to invest in developing its image. Okay, there's one more thing which could happen is that the market standards are basically low cost also. The market standards are, the market also wants a product to be low priced and at the same time delivering quality. So this product price could actually be reflected through the cost, or you could say the gross profit margin will reflect the product cost. So what are you going to do? You're going to say revenue growth. In fact, a better appropriate measure from the revenue growth is going to be the gross profit margin, because the market standards are these that it has to be lower cost. So the group of KPIs which are suggested for each of the CSF are under the organization's performance measurement system will now constitute the above KPIs. The organization's performance measurement system will now constitute the above KPIs. Now, the important part of the requirement is to establish that whether it is sufficient to measure the strategic performance. So we need to evaluate that to what extent this we need to evaluate that to what extent this we need to evaluate that to what extent this these KPIs will cover the objective of organization. So the organization's objective is, I did mention but I deleted it, right? Is to provide adequate return to its capital providers while growing the business. ROCE will measure the return. The awards will talk about the organization's status as the world class supplier. The gross profit margins will add to the evaluation of world class supplier status, as the gross profit margins will add to the evaluation of the world class supplier status, as what actually happens is that this will add to the world class supplier status, as this would mean that we are competing with the best even in terms of cost. However, the above KPIs will not reflect the long-term growth which could be better evaluated on the basis of future growth and the brand image. Kindly let me know if you people understand all this. Yeah, do let me know if you people are able to understand all this. I've seen, I've got a list of questions from you people. So I'm just gonna go through those questions. Yeah, you can relate to customer satisfaction by survey also. Yes, the quality control is also going to be one of those things, KN. Well, the point is that the above was the alignment of those KPIs with the CSF, and the second time I gave the summary, that was basically, is it relevant to the strategy? Because what happens is that when you are talking about CSF, it's middle level goal, it's medium term goal. When you talk about the strategic aspects, it's a long term goal. Haris, if you would have been talking about the number of new products that are being launched, or if you would have been talking about the Nishil, if you can think of additional KPI, let me know. You can have return on capital employed, you can have return on equity. All of this is going to be the relevant KPI. Can we have debt service coverage ratio? Okay. So that is going to talk about the debt provider only, not the all capital provider. Yes, Rebecca, we can have total shareholder return, but that is again only for the equity providers. Yes. Yes, suitable. Gearing can also be suitable, but again, gearing is more of a risk, more of a because you see, what are you trying to establish? Keep the capital providers satisfied. Are the capital providers going to be satisfied with your gearing? No, they want return. They want return. There are students who are suggesting ROI. So ROI and ROCE is the same thing. You cannot distinguish between ROI and ROCE. ROI and ROCE is the same thing. And if I go for the total shareholder return, it is again going to be only shareholder. It is not going to be the debt provider. It's not a measure that is capturing both. Okay, now there is a suggestion, economic value added. Well, yes, economic value added could be added because the EVA is the overall value creation for the business. So, but again, it's more of a shareholder value creation. So again, the total shareholder return EVA would serve the same purpose because I'm trying to establish a universal measure. Okay, now, what else is there? Okay, I told you that residual income is again shareholder focus. I'm trying to achieve one of those measures um, which is going to cover up the entire shareholder satisfied. The examiner has not told you that you should mention two CSF, two KPIs for each CSF. All that he has mentioned is that you should not tell us more than two KPIs. He has not mentioned you should mention two KPIs for each. So that is something that you would have to keep in mind. Okay, let's move a bit forward now. So the next aspect of this question is, we're done with this requirement one. The second is about target costing, which is a 10 mark requirement, a 10 mark requirement on target costing. Let's talk that what exactly is this requirement covering, the 10 mark requirement. The 10 mark requirement, let's just try to understand what exactly is it covering. Now, uh there's something about outsourcing. Let's just read what is he saying. The examiner says that fault has selected. The examiner is saying fault has selected a suitable manufacturer for the outsourced work. Zella Manufacturing is based in Sealand, which is a much lower cost environment. So they are thinking of outsourcing and they've selected Zella Manufacturing. They've selected Zella Manufacturing. Fault is preparing to enter into the detailed contract negotiation with Zella. Manufacturing will be done under the license from the Fold. This means that Fold supplies the product designs, but retains intellectual rights to them. And Zella manufactures according to agreed standards of quality. Zella then dispatches the devices back to Fold, who add the software, package, and the product and then send to their customers. Quality standards will be set by the service level agreements, which will be agreed in the contract. In preparation for these negotiations, the Chief Executive Officer needs you to supply advice on the following three critical areas: target costing, responsibility for quality areas and information for the negotiation of the agreement. So that is what CEO wants us to tell him. Now, what is the first thing with respect to target costing? What is he saying? Let's just read. He said CEO realizes that he needs to understand the cost structure of the products in order to have a firm basis for price negotiations with Bela. So he said, "Tell me the cost first. Then I'm gonna negotiate." He has heard that target costing could be helpful. Therefore, he wants you to explain how target costing works. Sorry again. I'm just hoping that my previous answer is saved. Okay, so basically what happens is that the CEO wants you to explain how the target costing works and how it may be used in this situation. So he wants to know that how the target costing works and how it could be used in this situation. In order to clarify the explanation, he has gathered information on one product which requires a redesign before being relaunched onto the market. He wants you to provide an example. He wants you to provide an example, calculation of target cost gap, and an explanation of how the result of this would impact on negotiation with Zela. So if I could summarize the things that I have gathered from here, he wants you to explain how target costing works. That's one thing. Also, he wants to know how it may be used in this situation. He wants to provide you an example of the target cost gap and an explanation about how the result of this would impact on negotiations with Zela. Now, this is something that the examiner wants you to do. What is the appendix 1? We've got the appendix 1 here. So what I want you people to do is that to take 4 or 5 minutes, try to actually read through this appendix 1 and try to solve the examiner's requirement. Try to do the sample calculation, please. Yeah, please try to do the sample calculation. I repeat, try to do the sample calculation of the target cost. What is he asking us to do? He wants you to provide an example calculation of the target cost gap using the data in product 1, 2, 3. So use this information and calculate the example target cost gap. Yeah, I'm giving you 2-3 minutes. Kindly do it. Yeah, are you people done with it? Yeah, is everyone, are you people done with this calculation? Let me know when you people are done. What is the cost gap? Yeah, what's the cost gap? Okay. Any suggestions on the cost gap? Okay, I've got 2, 3 answers. I'm gonna share them now. I've got 2, 3 answers. I'm gonna look at them. Okay, I'm just going to start doing the calculations so that uh, we could compare your answers and my answers. Okay, 1.04, 1.5, 1.4, 18.5, 12. Okay, I've got a complete variety of answer. Now let me just try to calculate on my own. I'll use the spreadsheet to do the working so that we're able to get answer immediately. Now see, the company aims for a profit margin of 20% on product 1, 2, 3. The target price is 175 per unit based on sales and marketing research. So if I am going to do the calculation of target costing, so what am I going to do? I'm going to say that expected selling price will be 175. You could probably insert the dollar symbol here. You could probably insert the dollar symbol. Now, what actually happens is that the remaining commercial life of the product is 2 years. Okay, so I could say that basically what I'm doing right now is I'm working on these documents simultaneously, right? So I will be trying to adjust the sizes of these two so that I could just write down on both simultaneously. So the expected life for me is 2 years. Estimated that approximately 250,000 units will be sold over the remaining life of the product. Expected units are going to be 250,000 units. It says material cost is 37 per unit. Material cost is 37. Okay. The each unit will take 0.5 hours of labor at an average rate of 25. The labor is basically 0.5 hours at the rate of 25. Then what is actually going to happen is that each unit will use 1.1 machine time at an average cost, including overheads of 32. Machine time 1.1 hours at the rate of 32 per hour. The packaging and delivery cost is 8 per unit. Then there is this design cost of the unit are expected to be total 2 million. So I would say 2 into 10 raised to power 6, so will give you 2 million. There is this inspection cost 100,000 per annum. The design will not affect this. Okay. The inspection cost. So even you redesign the product, this cost will still be incurred. I repeat, even if you redesign the product, this cost will still be incurred, which is 100,000 per annum. The rate of failed products either is spotted by customers or the inspection team is expected to remain at this 2.5%. So basically, the failure cost, the failure rate is 2.5%. The failed products will be reworked. Okay, the rework cost will be 20. The software will cost 40 per unit. Now try to understand what am I gonna do. I'm gonna say, okay, this is the selling price. What is the target profit? The target profit margin of 20%. Profit margin of 20%. The profit is margin is profit on sale less the desired margin at the rate of 20%. So what happens is equals to this into 20%. Hence, this is going to be considered as target cost. I'll do the formatting later on. Less actual cost. I'll do the formatting later on. I'm not just doing the formatting right now just because I think that the formatting can always be done later on. Just try to put in the things right now. So what I could possibly do is that I could put it here so that I can have an inner column to work on. The material cost is this 37. The labor cost is this half an hour per unit into 25 is the rate. The machine time is going to be this into this. The packaging and designing cost is going to be 8. There's this design cost which is expected to be 200,000 in total. So what we could do is that, 2 million in total, we could do is that we could divide it by the expected number of units, so it turns out to be 8. There's this inspection cost which is 100,000. What was the will be sold over the remaining life of the product? So the life was 2 years. So I'm just assuming that if the life is 2 years, this is actually gonna be twice. So hence this is going to be this into 200,000. So what I could do is that I could say the inspection cost is 200,000 divided by the expected number of units gives you 0.8, and I could say that the failure rate is 2.5%, right? So the failure rate is what? 2.5%. So the number of units which are actually gonna fail is this 200,000, just 6250. So what is actually gonna happen is the rework cost per unit is 20. So what are you gonna do? You're gonna say this failure units multiply by the rework cost per unit divided by 250,000 units. Why? Because I'm gonna split it over 250,000 units. So I end up getting, okay, I should mention it as rework cost. Then there is this software cost, which is gonna be 40. So if you try to calculate, the cost gap is gonna be $2. Now, a lot of you would be wondering that what have I done? I did nothing. I simply copied the relevant information while I was reading through the question. I'm trying to increase or the size, I don't know, something wrong with it. I'm unable to increase it diagonally, but anyways, whatever. Oh yes, now I can do. Thank you. Okay, so this is target costing. Hmm. Let me tell you one thing. It is entirely up to you if you wish to actually um, do this formatting. Otherwise, even if you don't do the formatting, that is perfectly fine. Okay, so we have been able to calculate the cost gap, which turns out to be what? Which turns out to be 2 million. Now, if anyone has got any questions on this, you may ask. How did I calculate the failure rate? How did I calculate the failure rate? I calculate the failure rate like this. I said that the number of units multiplied by this percentage. This is the failure rate. The total rework cost, I calculated it like this. I said this failure rate, the number of units which are gonna fail, multiplied by rework cost per unit. So this is the total cost. Divided by this cost is to be spread over 250,000 units. Okay, how did I calculate the labor cost? How did I calculate the margin? Uh, you see, I actually, what I did was I copied down the questions information while reading through the appendix one. I kept on putting in the information onto the spreadsheet. So if you could see that the labor cost is half hour per unit, 25 is the rate per hour. So this labor cost is going to be this half multiply by 25. Then you've got this machine time, which is machine time multiplied by rate. There's somebody is asking me how the margin has been established. Margin is simply profit on sale. The selling price is to be 175. If you want to earn 20% on it, it's going to be multiplied by 20. The target cost is 140. Okay, now let's move on to the next part of this question. I repeat, let's move on to the next part of this question. And what is that next part of the question? Try to understand. Are you still confused? Why am I still getting the confusion? How did you calculate the inspection rod? For me, the failure rate, I calculated 20 into 2.5%. Yeah, that is also okay, Julie. Julio, this is also okay. Okay, Juliet. Now, how did you calculate the inspection cost? Okay, see, the inspection cost was 100,000 per. The inspection cost was 100,000 per annum, right? And if you have got 2 year as a life, the expected life is 2 years. So the total cost is 200,000. What have I done? I have simply said 200,000 divided by 250,000 units. Okay, now, so we are done with this target cost area. Now, what next needs to be done? Let's try to understand what needs to be done with respect to it now. Now, so he wants you to explain how target costing works. He wants you to provide an example calculation of target cost gap and an explanation of how the result of this would impact on negotiation with Ziegler. Now see, so what you would do is that you would explain the target costing. You would explain the target costing that you establish selling price, you deduct the desired margin, and you compare with the total cost. The difference is called the cost gap, and is the cost gap is reduced using different measures, etc., etc. So then, using the information in appendix 1, the spreadsheet identifies target gap to be $2 for the spreadsheet identifies the target gap to be $2. The spreadsheet is identifying the target gap to be $2. Now, so the target gap suggests that cost reductions are to be achieved. This would mean that we will negotiate with Zela at the time of agreeing the price for the outsourced manufacturing. Based on the model of fault, the cost to be incurred by Zela would be what? The material cost would be incurred by them, labor would be incurred by them, machine time would be incurred by them, the packaging and delivery would be incurred by them, the designing cost would be us, inspection cost would be us, the rework cost would be them. Again, so if you could just say the cost by Zela, it could be like this: the material cost, the labor cost, the machine time cost, then who incurs this packaging and delivery? We deliver to the customer, right? So we incur this. Who incurs design cost? We incur. Inspection cost is incurred by them, plus rework cost is incurred by them. Cost gap percentage is this divided by this. 2.33%. Now try to understand few things, which is basically based on the mode of the fault. The cost to be incurred by Zila would be $86 per unit, and this is approximately, and the cost gap is approximately 2.33% of the total cost. Maximum negotiations should be done with Zila to fetch the product at even less than $84, giving fault the margin for error, if any. Because you see, your own cost etc has been incorporated, because the designing cost is yours, the packaging and delivery cost is yours, the software cost is yours, and the rest of the cost belongs to them. So what you got to do is that you got to make sure, I repeat, what you got to do is that you got to make sure that you try to reduce these costs to the maximum possible extent. Now, so basically this is we are done with this specific part also, because the requirement of the question was that you got to talk about target costing and this. So I'm now moving on to the next part of the question. Okay, you want to see the 2.33% calculation? See this. 86 is the cost. Is everyone okay with 86? Now, if I say this 2 divided by 86, this gives you 2.33. 2 divided by 86 gives you 2.33. Okay, now. So we are done with target costing. Now what next is there? Responsibility for quality. What is he asking us to do? I'm emphasizing again that the reason for me writing down in the bullet pointers is, if I write down in the paragraph form, you won't be able to understand. What does it say with respect to quality? The maintenance of the existing quality is critical concern for fault, since it will focus on software as the key selling point. But this will not be sufficient for market success if your hardware does not meet market standards. CEO wants you to explain the 4 quality cost area and how you evaluate the responsibility of each area should be divided between fault and Zella. So what are you going to do the answer? You would talk about the prevention costs. You would talk about the appraisal cost. You would talk about internal failure cost. You would talk about external failure cost. And with respect to the prevention, the product design, the software upgradation, that is the prevention cost. The appraisal cost could be inspection. Internal failure cost could be rework. The external failure costs are all those costs that may be incurred if failure reported by a customer. Okay. Now, the responsibility both have to take. The TQM approach requires customer and supplier to take responsibility of the quality. If fault does not design the product appropriately, then the failure would arise on the manufacturing side due to poor design. If Zela does not maintain quality standards of manufacturing as laid down in SLA, then even a good software and design would not lead to satisfied customers. So that is something that you would have to do. Both are responsible. You can't hold one of them to be responsible. Are you all okay now? Yeah, are you all okay now? Okay. I haven't explained that in detail. That okay, Swiss, Nukoro, just wait a bit. Nukoro, you could just see what have I added up with this 88, 86. Now you could just see what are the things that I've added up for 86. Okay, I hope that this is clear to you now. Okay, Kelly Lamb, don't worry, I'll do that. So we are done with this part also. Now we are left with the last part of the question. And what does it say? It says Fault has appropriate information system in place for its existing manufacturing operation. The CEO and the board are happy with their operation at present. What does it say? Fold has a appropriate information system in place for its existing manufacturing operation. CEO and board are happy with the information with the operation at present. However, Zila has indicated that its current information system are purely financial, aiming to collect required information for its financial reporting duties. CEO is worried about this and wants you to provide an assessment of the impact of this on the management of quality within the contract. Now, so what do we need to do? Impact of the sources of information on the management of quality in the outsourcing contract. The CEO, what does he want? He want to provide an assessment of the impact of this on the management of the quality within the contract. Now let's try to have an understanding. I repeat, let's try to have an understanding. Okay, what is the examiner asking you in this? What is the examiner asking you on this? What is your assessment? Yeah, what is your understanding? What is he asking you to do? Okay, now let me guide you with respect to this. It's a very vague requirement, and one of those requirements which you would say that you might not do properly in the examination. Now, he's saying impact of the sources of information on the management of quality in the outsourcing contract. Now just think about it. Just think about it. I'm just going to open some of my workings for you people just to give you a bit of an idea. Insert a page to it. Okay. Now see, this is Zela manufacturing. This is fault. When we manufacture, we have got our information system. What is an information system? It captures different information. What is that different information? It could be a lot of things. It could be a lot of things. It could be production breakdown. It could be the stock out position. It could be the material returns, etc., etc. It could be the rework related detail. It could be the inspection cost. It could be the it could be the material issues. A lot of things. A lot of things. There is an information system that is there in your place because you are manufacturing, because you are operating as an organization, and while operating as an organization, you have a system to actually capture all these information. Now, the problem that is happening now is that, I repeat, the problem that is happening now is that you're outsourcing your manufacturing to Zela. Now, what Zela has told us is that we have got a system in place to actually capture the financial information. Means non-financial info is not available. Means non-financial info is not available. So if the non-financial info is not available, so the important aspects of the production that we used to gather earlier, the info that was available, how would we know about it? If we want few things to be reported in as per the SLA, they would not be there, because obviously we are having an SLA for the maintenance of the quality standard. If I am having an SLA for the maintenance of the quality standard, they should deliver that to me. They should let me know that what is the information that they have. So now, what you actually got to do is that you got to report here to the examiner that look, the problem right now in this specific scenario is that Zela does not have a system. There are information which is required to monitor SLA. In the absence of appropriate information system, it will become difficult to implement the quality standards. You see, in the absence of the appropriate information system, it will become difficult to implement the quality standards. So now, if it is actually going to become difficult to implement the quality standards, so what is it that you need to do? An information system is required to be implemented at Zela. The problem with information system implementation is that Zela may find it difficult to adopt, design a system. Some collaboration could be done where fault can offer its information system to be implemented at Zela, and Zela can develop a similar or improved system for their own at a later stage as the contract progresses along. Based on this, based on this, the outsourcing contract cannot operate under proper monitoring unless an appropriate information system is implemented in it. That is it. That is something that you would have to incorporate. Do you people get it? Yeah, do you people get it now? Okay. So we are done with this question. We have gone through quality management's aspect also, although the entire quality management hasn't been completed as yet, but still we have gone through a significant portion of the quality management just for the purposes of ensuring that you people do understand what quality management is all about and how the different type of scenarios could be implemented. Now, if you could just look at the different questions that we have done up till now, a lot of you people would realize that the paper is very general. Now, if the paper is general, then why is it that the students don't pass? As the saying goes, that the common sense is something which is not very common. Unfortunately, it's just that we are unable to apply ourselves. We don't have enough practice. You got to practice not just at looking at the answers. It has to be like writing down the answers. The time management is also the key, Dana. But again, it's like that you will get it once you start solving the questions on your own. The problem that happens is that you don't solve the question. ACC has done a wonderful job by introducing a CBE platform for you people. Aaron Fernandez, that's unfortunate that everybody wants to know that what are the best things that could. Uh, okay, I can share a list of questions. That is doing. That is okay. Okay, now. So I think we are going to end it here. In fact, I would want to have your suggestions for today. That how did you find today's session? Yeah, I'll share my solutions. Don't worry about it. Okay. Well, thank you very much, all of you. Kishan, Elise, Diana, Walid, Rebecca, Mohammed Qayyum, Walid Khan, Suez Nikoro, Sofili, Irene. Thank you. Yeah, Dixon, unfortunately, the time moves very fast. Maneka, yes, this is unfortunately the biggest problem. When you read through the examiner answer, you are unable to understand where is he going. So what I would suggest you is that once you read through the questions requirement, just try to jot down the points. Once you start jotting down the point, you will slowly gradually get to know that okay, this is what it is. An unfortunate thing is that even the examiners, uh, the marking scheme is not even marking scheme is not even good as like it would be for AAA or for AFM, because it's a general paper, like anyone could actually mention anything. John, thank you very much for this. I'm just hoping that you all pass. Just hoping that you all pass. Well, Diana, it's actually up to the scenario that a 1 point equal to 2 marks or 1 point equal to 1 mark, because the scenario could guide you accordingly. If there is a long scenario, large scenario, usually the examiner gives you 1.2 marks, 3 marks, because the marks are for the discussion. The marks are not just for the mentioning of it. I bet the marks are for discussions. If you think that you are unable to understand any of the question, you may read through the examiner's answers. Yeah, I'll teach EVA with a quick overview, and then the exam practice question, inshallah, by tomorrow. I am actually targeting 3 topics. One of them is risk management, one of them is divisionalization, transfer pricing, and the third one of them is this corporate failure. So that is what I am targeting over the next 2 days, that I would try and actually go through these areas. Okay, what I can do is that I have taught various questions and I've got the answers to those questions compiled by myself. So I can actually share the answers with you people for those. It's gonna take me a day or two, because I'm very busy nowadays, stuck in a lot of things. Because I just don't only teach ACCA, I teach another qualification and I'm stuck in that also, because everyone has got a paper from next Monday. So do give me 2 days, I'll get back to you. Okay, then. Thank you very much, all of you. Thank you for your time. Take care. Allah Hafiz. We meet up tomorrow, inshallah.